Good afternoon, everyone. Good afternoon, YouTube Live. Just to let you know, I put that over there because you hardly ever see it posted anywhere. But I did a class on the art of short selling, which is a little different than most other sites. I hardly see any sites on the art of short selling. So it's just something you need to have in your tool, in your arsenal. If you join the Chart Pattern Mastery Room for annual, I think you get it for free. So pretty big deal in here. I know it's hard to ever find it, but there it is. The art of short selling. So just to let you know. So what are we doing in here? Well, number one, a bear flag is a bear flag. Number two, I want to go over a number of things that so many sites get wrong. The first one is identifying an uptrend or a downtrend. I just can't stress that enough, and how to combine it with things. This is about the MACD, as you saw up there, just a half-hour thing, and I wanted to go over it with you. So the first thing we're going to do is, and I can't stress this enough as well, there are so many sites that have so many indicators that you can't even trade. It's sort of like if you play golf and you have 20 swing thoughts, you can't even swing. So a lot of people, you see a lot of pros that start again, like they forget everything and retrain it, and just start with one layer at a time. Well, I'll show you the basic layers I use, and they've worked for 45 years. So what am I talking about? Number one, I use the MACD. Number two, for determining a downtrend or an uptrend, I'll use a 200 and a 50. That's it. That's it. And you can use the ATR trailing stop if you want. The key in there is you're trying to determine if it's an uptrend or downtrend. Now, I got a question. How many people right here said that Tesla was still an uptrend? Probably everybody. It's under the 50. The 50 is rolling over. It's under the ATR trailing stop. It began a downtrend way here. Everybody wants to buy it on the way down. That's not the way to play markets. You can buy on a temporary way down when you have a cycle like that in an uptrend. But in a downtrend, you're looking to short rallies, not buy dips. So just keep that in mind. I'll give you a perfect example. Here's NVIDIA now. So on Twitter, I saw a number of sites that were buying Twitter because it went up on Friday. Well, what were we doing? We were shorting it today. We were shorting it because of the MACD. So let me give you the settings we use. I don't know how to do it on the YouTube Live, but I'll show you the most simple, basic settings. All we're doing in here is we're using a MACD on the bottom. You can use an RSI. You can use a stochastic. I use the MACD, the 3-10-16 simple, the two lines. Now, I see a lot of sites that rip that off and call it their own, like the LBR or something. It's the MACD, two lines, 3-10-16 simple. That's it. It's the same one it's been for 45 years. If you want to rebrand it, still the same thing. So that's number one. Number two, if you go into my studies, you're going to see you have the 50, the 200, the ATR trailing stop. That's it. That is it. So what's the first thing you're doing? The first thing you're doing is determining if it's an uptrend or downtrend. So, you see it's in a downtrend. Number two, it's overbought in a downtrend. What's that mean to me? It means to look for the bearish reversal pattern. That's all you're doing. You're looking for the bearish reversal pattern when something is overbought in a downtrend. Did NVIDIA have it? It sure did. We made 2 points in NVIDIA today. So I'll show you. Here's an hourly chart. Does this show you the reversal? Not necessarily. Did a 5-minute or a 2-minute? It sure as heck did. Look at that. Did we sell the top? No. Any of these sites that show you that they shorted the top or they bought the bottom, I would take it off your share on Twitter. You're shorting the direction. You're buying the direction. We shorted on the break. That's all we did. We shorted on the break. Don't make it harder than it has to be. That's what I'm telling you. You're using on an intraday chart, you're not even using a 50 and a 200. On an intraday chart, you're using a 20 and an ATR trailing stop. Intraday. That's it. You're using that. And as you see, the 20 is no bargain. So, in fact, that brings me to this. I hope you follow me on StockTwits, like 57,000 people do. So I'll show you what we're talking about. And I'll show you why I put it there. The reason I put on StockTwits is the chat erases at night, and there are a ton of posts that might not be in there. So I go into StockTwits, and I'll show you what we're talking about. Oh, it's really nice when we put a short idea before the opening. Just keep that in mind. Already overbought. That's before the opening. Then we look for the reversal pattern. So keep that in mind. The other thing, there are a few stocks turning the corner, but an overbought MACD under the ATR trailing stop means to look for a bearish reversal signal, not to blindly short. Doesn't mean to buy whatsoever. And that's the next thing. That's what I'm doing in this half hour. I want to show you on how to determine the trend. So keep in mind, though, when I'm trading short term, I'm using the ATR trailing stop. If the price of the stock goes wonky, so goes way down or way up, well, the average true range widens. So you got to use something else. So that's why I have the 20. I don't use the 20 religiously. I use the 20 if the price gets out of whack, where the average true range trailing stop is too far away from the price. That's it. So I just want to make that clear. But this is what I want to show you. Here's a daily chart. See the MACD? It's overbought. That doesn't mean to short. It means not to buy. You're in a downtrend. What it means is to look for that reversal signal short term to play it to the downside. There's a time and a place to play the upside. If you want to buy on these kind of cycles, I totally understand doing that. Totally. But you're in a different environment now. You're in a downtrend. Nobody wants to believe that. So you saw it in Tesla. You see it in NVIDIA. So you have big rallies and downtrends. Some of the most money I've made, believe it or not, is buying in a bear market, because the bear market rallies are violent. So keep that in mind. Look at this. Look how long that took to go up. But once it had a downtrend, look how fast it went up. I'm just telling you, you get these bear market rallies and they're vicious, like you saw in NVIDIA from 105 to 120. Huge vicious rally. But now it's overbought. Doesn't mean it can't go higher, but the probability of chasing rallies in that type of market goes down dramatically. Doesn't mean you can't make money doing it. It's just all about probability. So keep that in mind. Number two, when I talk about StockTwits, by the way, and I think you know if you've been following me on StockTwits, because if you go to my profile, look when I started StockTwits. I don't know if it shows on here. Let's see. September 2009, almost when they started the site. Just keep that in mind in there. I would say I hardly ever brag. This is for content, not bragging. I'm not very good at promotion. So especially self-promotion. It's for content. Look at all these. Not one is bragging. So it's all about content. So just keep that in mind. A lot of them is showing trades before they happen, not showing you the exact trades. That's for the Chart Patterns Mastery Room. So just to let you know, but that's the kind of stuff we do. Now, getting back to it about the MACD. The first thing you want to know is, do you trade it on swing trades or day trades? Well, let me show you what we're talking about. From a swing trading point of view, And I'm going to go back and put the 50 and 200 on the left. And on the right, I'm going to have it back to this way. So let me just show you. So on the left, you're in a downtrend in Tesla. Look at the slope. Slope's pretty bad. If you're wondering, this is the 50. How do you know the 50 is turning down? Because right here, it's lower than 50 bars prior. That's how you know the 50 is going to go down. The 50 is just a moving average. So why is the 200 turning down? Because this is lower than 200 prior. Now that's the simplest thing to show you. So that's a 5-minute. Now, how about a daily? Well, a daily, same. This is lower than 50 prior. That's why this turned down. It didn't turn down until this was under this. So just keep that in mind. So on a daily chart, I'm going to use the MACD, the ATR trailing stop, the 200, and the 50. That's it. And the other thing, this is another trader myth. I just can't stress enough how a number of trader myths. And here's one of them for you. How many sites show you that the markets are going to stop at the 20 SMA or the 21 EMA? How many sites show you that? On the way down, care about price support. Don't care even about the 200. So just keep that in mind. I've 45 years, never seen it work. Just to let you know, never seen it work. In an uptrend, sure. I'm talking about in a downtrend. In an uptrend, those things can work fine. But in a downtrend, it becomes animal spirits and things go to support, like you see in Tesla. So on the left is just the 50 and the 200 and the ATR trailing stop and the MACD. That's it. On the right, you can have up the 20 and the ATR trailing stop. That's it. So let's go and show you. I just want to show you because the point in here is that it's your time frame of how you want to trade. There, that's it. So do you want to short the Russell? Well, guess what? It's in a temporary uptrend on an hourly. I don't want to short the Russell. So it's overbought in a temporary uptrend. So let's go over a couple of rules. So number one, Tesla, overbought in a downtrend means to look for the reversal pattern on the downside. Like here, overbought in a downtrend. Now, a lot of people ask me, how do you know it's overbought? How do you know when it's overbought? You don't. You just know it's back over zero. Then you look for the reversal pattern because, heck, it could go this much up. So it's not the degree of overboughtness. I don't even know if that's a word. It's looking for the reversal pattern. Then you know the overbought is done. So just keep that in mind. That's what we're watching in here. So thanks for saying that, Jamos. I appreciate it. Even though there was a lot of slack about Tesla. Let me just put it that way. Lots of slack. But getting back to it in here. So downtrend. Now, let's say you want to trade it short term. So let's take the NVIDIA and you want to go against the grain. That's fine. Lots of us are day traders. Hourly chart. That's why we liked it here. We liked it here. It started turning. So your time frame had to go down. So if you're playing hourly, sure, that looks like it's turning the corner. Daily, no. Hourly, yes. So if you want to play this little bull flag in a downtrend, you got to get out of Dodge pretty quick. So just keep that in mind. You're playing it on an hourly. So how about right here? Can you play it on the upside? Yeah, because keep in mind, it got overbought here, but it was overbought over something on a short term. So just keep that in mind. So, that's what we watch in here, the overbought and a downtrend. So 50 and 200, no, I do not use it intraday. And an intraday, I use a 20 and an ATR trailing stop. That's it. That's it. No more, no less. And you can even take off the 20, except if a stock really plummets or whatever, and then it gets too far away. But everybody uses a different moving average. I'm just telling you what's worked for 45 years. Intraday, 20 ATR trailing stop, nothing else. If you want to use a 9, that's fine. That can help with timing. But that's it. Don't use anything else. So you can go back. I'll just show you. Let's just go into here, and I'll show you intraday. Go to NVIDIA on a 5-minute chart. Put in 20 EMA because 8 million people use it. Go and use a 9. I'll make this a 9. Let's just make this a 9. You have a 200, you have a 9, you have a 20, you have a 50. So do they help? It looks like noise to me. It looks like the things that work are the ATR trailing stop. You know, a 50 you could use, sure. But I'm not going to use that to buy or sell. As you see in a downtrend, it didn't work at all on the downside. You can help, that can help to determine trends, sure. You could do that. You know, like you see on the Russell. And like I said, whatever can get you to the end line. So if this is too many lines for you, you can always have a 50 up there to determine an uptrend, sure. But to me, if you see the bull flag, it's a bull flag. So VWAP, I don't use. Other people use it. So for a day, intraday, fine. But chart patterns rule. Let me just put it this way. If you took off every single thing, do you see a bull flag? Why do you need a VWAP? That sure looks like a bull flag to me. And guess what? The VWAP was down here. You would have missed the move. So I'm just telling you, I don't use a VWAP. Why? I mean, I haven't for 45 years. I've been successful, but when day trading like the ES on a 1-minute chart, I might use a VWAP, sure. But whatever gets you to the end line, I'm just telling you the way I do it. So many have different ways to do it. It's like swing thoughts in golf. There's 8 million teaching pros. If it rings true for you, use it. This is just what I use. So just keep that in mind. That's just what I use. Other people use other things. So, but that's what I use. So just keep that in mind. If you use a VWAP, let's just see. Because I love looking at all different things. And I have a VWAP chart. Here. So how did that work here? Well, okay, I guess. But the point is, here's a bull flag. You might not have done the bull flag if the VWAP's down here. You know, on the way down, sure, that VWAP was support, but so was price. So here, bull flag. Got way over the VWAP. Well, you made that money. So, I mean, there are a lot of ways to look at it. And if you bought, if I use a VWAP, if I ever use it, I combine it with a reversal pattern. So, I mean, don't get me wrong. I totally understand if you want to use it. So just keep that in mind. I totally understand if you want to use it. So, you know, just keep that in mind. But I like to use a reversal pattern too. So let's say right here it's in an uptrend. On that sell-off, whether it's price or the VWAP, you got to see that follow-through candle. That's what I think. Like here, it never got to the VWAP, but you had the follow-through candle on the bull flag. But getting back to it about the MACD. So I'll show you on what we're talking about in here. So I'm looking at this. MACD. So let's just show you multiple time frames. So now a lot of times I use, this doesn't show you the MACD. A 1-minute chart, I don't use the MACD. But on a different screen, I have this. Let me show you. All right, on a different screen, I have this. I have 8 time frames. There. I have an hourly, a 15, a 5, and a 1. What do you notice? 20 moving average, ATR trailing stop, nothing else. Now, don't get me wrong, I might throw in a VWAP in there. You know, if I find the VWAP works a lot for me, I'll start using it more. So just keep that in mind. Next thing in here, what do you notice about the NASDAQ? It was oversold and it reclaimed something. But I don't care about the NASDAQ today. I'm caring about the Russell because the Russell is what has held up the ES. So the Russell holding up has kept the ES from plummeting. Just keep that in mind. Russell going up has held up the ES. So, I mean, that's what I've been watching all day. The other thing in here, if something has a bull flag, even if it's a long-term downtrend, if it has a bull flag, let's say on a 15, and it's oversold, and the hourly isn't that overbought, yeah, then the bull flag could work. So just, you know, but definitely I like combining. When I'm day trading, I use a 15 and an hourly to use the MACD. If this is under things on a daily and an hourly, I don't trust an oversold in an uptrend because to me it's oversold in a downtrend. But what do you notice? It's not in a downtrend on an hourly. It's not a downtrend on a 15. So just keep that in mind of putting a broad perspective into this. So I just think it's a big deal. So, and I hope that helps. So that's the way I look at it. So right now, what do? Well, it's a push. The Russell's holding up. The Russell brought down broad markets. And that's the next thing I want to show you at the end. So let me show you what we're talking about. So let's go to this and I'll show you. So number one, just keep in mind, overall, the markets are in a downtrend, but they're not in a downtrend right now. I mean, hourly. So the next thing I want to show you is this. We're going to go back to what I was showing you. So we're going to show you this. This is a 2 grid, 50 and 200. That's it. Now, what you're going to see on the left is the Russell. Russell is decisively under the 200. See that? That's why all these pundits saying that the ES is going to stop at the 200. Why? If other indexes are way under the 200, why should the ES stop at the 200? Now, it can snap back to the 200, no doubt. But I'm talking about why should it stop on the way down just to stop? So just keep that in mind. Very important. Now, this is the next thing I want to show you when it comes to the MACD. We're going to take the ES and make it nice and big. Remember, 50 and 200. That's it. That's it. Now we're going to go to on demand and we're going to go into 2023. 2023. That was the last time the Russell had a big dumpage and broke the 200 and it pulled everything down. That's your ES on September 21st. In fact, I can do this and restore the cells and show you. There. See the Russell falling apart? The farther under the 200 that goes, the more likely on the right this will at least approach it. Approach it, which is what happened. So now watch what happens though. You see the MACD on the bottom getting oversold. Watch what happens on September 27th. The ES is approaching the 200, but now it's really oversold. So when I see that, when it's that oversold, and I see the Russell stabilize, now I'm going to see how the oversold is worked off. So what I mean by worked off, does it retain a bearish structure? So let's go to the 10th of October. See on how that rallied? Doesn't this look like NVIDIA? Yeah, overbought in a downtrend. So it got to the 200 and now it's bouncing, but now it's getting overbought near that 50. On the way up, yeah, the 50 and the 200 can act as resistance. So keep that in mind. So now you might say, well, this one bounced at the 200. Well, it really bounced from massive support. It's just a coincidence. Massive support. But the key is that if I'm looking for the short entry now, what I'm looking at is you're overbought near the breakdown, but you don't have the trigger to short yet. Just like NVIDIA. So now go to October 13th. See that? That's your, was there a trigger to short? Yeah, number one, the thing that made you go down in the first place on the left, resumed the downtrend. So keep that in mind. It resumed the downtrend, which made it more likely this was going to resume the downtrend. That's number one. Number two in here. Number two in here is once it does that, then you're looking for the trigger. So you see that there's one of the trigger. You got, and now look at that. You had a trend line, you had a trend line. So keep that in mind. And like I said, overbought in a downtrend, don't try to buy. It seems like everybody just knows how to buy. Just has to buy. So just keep in mind, you're in a 15 and hourly uptrend. Sure, overbought can move higher. And if I'm day trading, yeah, I'll look for the 5 minute to go back down. Yeah, it's a good question. In an uptrend, this the opposite. So you see what happened. You got overbought in a downtrend. So you broke that rally. Broke the rally. I'll put it on a daily on the left. So you got overbought at the resistance, and then you had the trend line break. You got lucky. You got a rally to the uptrend line that got overbought. And then guess what? You can go to even shorter time frame to time the next entry. There you go. Bear flag right there. A beautiful thing. So the key is when you're in a downtrend, you look for that snapback rally, and then you look for your short entry. Now, on the other hand, like you're talking about, if you're in a big old uptrend, yeah, I mean, you could look for a shorter term chart to time your entry, no doubt about it, especially if you're trading options intraday, no doubt. So let's just go right here. I don't have a lot of time, but right here, June 1st. So there's your turn on a daily, and there's your bull flag at a 5 minute. So in answer to your question, it's not necessarily you have to go to the zero line. It's how it consolidates after it starts the uptrend. There you go. So I hope that helps. Thanks for being with me, and take care.